Hi guys, this is Ray from nextforextrade.com. Today is Thursday the 22nd of August 2019. So today what I'm going to do is try and keep the video shorter than the others, and I'm just going to do a pick of three pairs that I've got an eye on in the market, and also the positions that I'm in. I've got two positions still open here. So if you do prefer the longer format where I just go through everything in the market, let me know, drop me a message, and I can just weigh things up. But let's kick off with the first one. So firstly, we're going to have a look at the AUDCAD. So let's just tidy these charts up a bit, get rid of these clutter here. So AUDCAD, we've got clear signs of bearishness, lower lows, lower highs. We've seen in the standard deviation channel, obviously it's interacted with it in previous lower highs, and it's currently around the average of our standard deviation. So this gives us some signs that the price could be overbought and have a tendency to move back to the lower edge, so lower. We've also got this resistance area that we've got from previous highs here. I would have mentioned, I think I'd done this one yesterday, but yeah, we can see clearly there's some it's had some trouble getting through this, which will be more prominent on the lower time frames as well. So this gives a reference point for our stop loss above these type of levels. We've had reversal candles a couple of days ago come off of this resistance, and the price move away from that and start to make will take out the lows of the previous candle. So this is all encouraging in terms of taking a short position. So when we look at what it's saying on the lower time frames, if we look at the 4 hourly, just going to capture that same move that we would have seen on the daily in a linear regression channel. So that move that I've just drawn on there is the same as this move on the daily. So this is our 4 hourly. So obviously that tells the same story, but what I'm looking at here is this, what would be a retrace on the daily. So this this move that we've seen up here, it's just something to be cautious of if we're looking to short, because although it's very encouraging with the way it's encountered the resistance here on the 4 hourly in the same way it did on the daily, and having trouble with this area here, and obviously allows us to have our stop above this level. This kind of movement up here is just something to be cautious of, because it's still within our standard deviation. It's still in the retrace, making higher lows and higher highs as well. So the kind of more conservative trade, rather than just shorting immediately based on you know, encountering that resistance and seeing reversal candles, is to wait for a bit more confirmation. And I'll come to that when we look at the lower time frames as well. But this so far is looking okay, but it's just not quite ready yet in terms of what we need to see. So if we look at the hourly in the 15 minutes, we can see the 15-minute chart has already started to show some nice signs of bearishness to correlate with what the daily was saying. So these lower highs and lower lows, we've got it within our standard deviation channel here as well. The hourly, it's obviously, that's this move here is the same as on the hourly. It's still in a bit of limbo, in my opinion. I mean, it's started to make these, you know, it's come up, it's done its double top, it's interacted with that same resistance, and it started to fall away. But for me, the kind of pivotal point is this support that we've seen here on the so let me draw this in on the daily. Actually, let's just see how strong this support is. This is the thing about doing things live. Sometimes you can just see things a bit clearer when you talk over them. So let's see what this low I mean, you could tentatively, okay, if I were to enter this, I'm not, because I'm already in two positions. I'd be happy to go short on this. I would just wait for the hourly to close, and then wait for a move past the low. So we are, it's about 8 minutes to 8 a.m. So this is going to close in the next 8 minutes. It's good on the hourly, the way that it's interacted with the average of our standard deviation channel, and there's kind of previous lows here that price has struggled to move past. So it's finding resistance off of that. But I would want to see it move past the low after it having encountered that resistance. So if I were to trade this, I'd wait for this candle to close, so the 8 a.m. candle, and if the price moves past the low within between 8 and 9, so in that next candle, allow for an entry with a stop loss above these highs here, so above this previous resistance zone that we discussed. So going on a 1-to-1 reward to risk, just, you know, on the low end of profit taking, it would take our take profit to around here, but certainly there's scope for it to at least before these previous lows, or holding in for a longer swing trade, likely these type of levels where it gets a bit more oversold. But the kind of finessing on the entry on this is really just seeing a bit more confirmation on these lower time frames. So yeah, basically within either seeing the candle close and move past the low here, or even if in the European session, if it continues to move higher, but then it interacts with our upper standard deviation channel and we see a reversal candle off of there, even better, because you'll have a better entry. And waiting for it to move past the low of that reversal candle, stops above here, 1-to-1 take profits, you know, would be around these areas, but taking it for a longer time is also viable. So let's have a look at something else. So what else we got? Let's have a look at cable. So pound against the dollar, similar way that we're seeing it kind of on the daily. A lot of the pairs are like this at the moment. So they've extended and they're pulling back, and they found resistance at the beginning of the week, end of last week, and they're starting to fall away. So this for me is, let's just talk through some of the ways I'm seeing this. So in terms of this bigger move, taking a standard deviation, it's encountering resistance at the average, which is good. I much prefer it to be the upper edge of a standard deviation that the price is encountering resistance with, but there's context here, and we're looking for that resistance because it means that we've got a reference point for our stop loss. But there are two ways that I'm kind of looking at this. This move also still has context, because when we drop to the 4 hourly, that's going to be more prominent as well. And in this instance, it's nearer our upper edge of our standard deviation channel that we're starting to see as reversals. So that just means there's enough reason to consider looking at the lower time frames with a stop placement above these levels. And it is approaching all-time lows as well. That's another thing just worth bearing in mind. So we can see, you know, there's some support that goes back to these type of levels here, which is why when the price fell to this level, it struggled to get through. So it's nothing to be you know, scared of, but I would anticipate as the price reaches these levels again that it could find some support. Certainly if it breaks that level, it's probably going to be a very harsh break, and it's going to, you know, rapidly move into extension lower. So positioning on this is prime time, because we've got lower highs here. We're basically entering after the last previous, what we're assuming is the last previous lower high. Let's drop to the 4 hourly as well. 4 hourly doesn't really give much more context other than that we've got more contact points on our resistance. It's a kind of zonal area here, but you know, it's interacted quite clearly at these points here as well. So there's premise to look for shorts. So the timing of this goes down to the lower time frames, and I would say the hourly isn't quite there, but there's enough context on the 15-minute, and you know, we've got enough information to say it's moved past the low of yesterday's daily candle as well. Stop above this type of level here, so it would be here on the 15-minute, and this would be something I'd be okay taking a short on, you know, even now, again, if I wasn't in positions already, which I'm managing. Certainly we'll see how these other ones go, but yeah, I'd be happy to short this. So an entry here, so this would be, let's assume I, you know, give it a little bit to account for the spread as well. Let's say it's 65 pips to the upside in terms of a stop loss. And let's go back to the daily. It would mean taking a 1-to-1 on this is around about these levels, which is, you know, fine. That's quite a probable trade. If we do see that bearish movement, taking profits off here is quite probable. As it approaches this level, it gets a bit more it gets trickier, because as it approaches here, it's either going to break or bounce. But so, you know, taking some money, at least some money off the table before those levels, is one way to approach this. But certainly if it does break, I'd anticipate quite a you know, a harsh break. So you'd be prepared for that, having taken a position from there. And these kind of oversold areas here would make that, you know, anything between just eyeballing that 3-to-1 or 4-to-1 in terms of reward to risk. Do bear in mind, given those are daily, that could take a while to materialize. So just bear in mind what the swap would be on the pound. Oh, it pays a swap. So this would be, I'm going to come back to this actually. This would be okay to hold for a longer swing trade, because you're not too worried about what the swap is going to do, you know, have an impact on your profitability. It's very similar to the euro trade that I'm in at the moment. You can see that this pays on the swap. I mean, just because there's a charge on the swap isn't a reason not to trade, but you need to bear in mind, if it's a likelihood of you having to hold the position over several days, that it's a cost of business. A swap is a cost of business, and if you're holding it for a very long time, it can eat into your profitability. But given this pays on the swap, rather than, you know, deducting it, I wouldn't be against holding this for a longer period of time. I'm actually gonna come back to that after I've just gone over the euro and the AUDUSD. So let's just have a look at the ones I'm in. So firstly, the euro USD, very similar price action to what we were looking at on the cable. I entered this, well, it's a few days ago. When was this? The 15th. So a week ago. So my entry was up here. This was only as a 1-to-1. And you can see, I mean, the premise for my entry, so it was around here. So it was, we're seeing lower lows, lower highs. It interacted with our standard deviation channel. I was assuming that this was the lower high. So my stops were originally around here. In recent days, I've moved down my stop loss to this level. So I've got a protective stop, meaning that should the price reverse on me, I will still make a profit around £30 or so. But I'm going for this bigger move to the downside. So I'm gonna keep on managing this. What I'm looking at, the lower time frames, the price action is pretty good. So the hourly, we're seeing this lower lows, lower highs. It's nicely fit within our standard deviation channel. I've got my stop above and outside of the standard deviation channel, as well as above these lower highs as well. So it's sensibly placed. The profit looks achievable as well, in that it's before this kind of low of the standard deviation channel on multiple time frames. It's also prior to this previous lowest low on a daily. So this goes back to what I was saying about the probable, versus possible trades. I mean, it's quite possible that this is going to bust lower and, make lower lows still. But as it approaches these previous lows, the price has a tendency to either bounce or break. Now I'm taking my money off before that level, right? So that means that, regardless of whether it bounces or breaks, I've taken money off the table and, profited from the move. So this one is, I'm happy with the way this is forming. Obviously, if we start to see higher highs, this may be something I need to manage differently, but I'll let the price action dictate how that goes down. And lastly, let's have a look at the Aussie. This is one, again, I've been in for quite a few days. I've got 3 positions in this, which I've scaled into this. My overall risk on this is 3%, which is the upper side of my, it's maxed out my risk profile for any one trade. So this was, when was the first one? So this was the first, it's been 10 days since this position was open. And again, it's one I'm comfortable holding over, over a longer period, because the context of this trade mostly is on higher time frames now. So the 4 hourly and the daily are the main context for this. The daily has given this bearish move that we saw, and I didn't know this at the time of entering. I had entered, I think, around where would it have been? Probably there on this candle. Yeah, I think on this oh no, it was 10 days ago, wasn't it? So it was way back. Probably. So I was probably assuming that. Yeah, I was assuming this was a lower high in this move, and that was a pullback. Look at the older videos for the context for that. But now this has kind of moved on, progressed. The trade still hasn't been invalidated, because with our standard deviation channel around this price action, my stop is still above the previous lower high, and it's also outside of our standard deviation channel. As the price approaches these upper edges, or any extreme of a standard deviation, the assumption is that it's going to kind of revert to the average, so go back to the average, and kind of like it's reached an extreme and it's going to fall back to the middle, like when you pull an elastic band and it snaps back to the middle. That's the assumption that we're making here. Now that assumption could be wrong, but I'm letting the price action guide how I make these decisions. So this is, almost a couple of weeks have been in this. A lot of the time it's been in negative, in the red, but the trade has not been invalidated. The idea is still fine. If we look at the 4 hourly as well, I'm okay with this. I'm okay with this because of the type of candles that we've seen on the daily. The hourly is quite flat, although there has been, in this move here, if we look on the 15-minute, that's probably a better one to give context to this. There has been some, the start of some bearish, lower lows and lower highs, and it has found support off of this previous level here, where it's interacted here. So really, what I would want to see going into the into the European and US sessions is for this support level here to start getting broken. I mean, I'm not going to change anything anyway. I'm not going to move stops or anything like that. But what I would like to see in the price action for this idea to continue to be valid is lower lows and lower highs in this price action. So for it to start cycling down with extensions and retraces, and that will just give more credence to this overall move that I'm anticipating. So take profits on this for for various reasons, kind of in this oversold area here, where I'm anticipating the price could move to. So yeah, that's it. Those are my 2 positions that I have, and 3 other ideas as well. So hopefully that's been of use to you, and I will be back again tomorrow. See you then. Bye.